reversal pattern is your head and shoulders top. I think everyone's probably heard about this. Pretty much anyone who's looked at markets will probably have heard of head and shoulders patterns, and it sort of is a situation where you get an uptrend, a strong trend, and you start to get the breakdown of that trend, and you then get a test of the support, and then subsequently the support is broken to the downside, and you get effectively a head and shoulders top, where you get a small top followed by a larger top, and then you get a lower right hand shoulder, which is your lower high, your key lower high, and that is in your top patterns. It's basically classic Dow theory. Dow theory is big topic of subject, but it is one of the basic tenets of technical analysis, whereby uptrends are, trend analysis is key. Trend analysis should follow the pattern of a succession of higher highs and higher lows, but when that sequence of higher lows is breached, then you start to get the breakdown of that trend, and you get your reversal patterns, and hence your head and shoulders top. The the opposite of that is head and shoulders bottom, which is in a downtrend, and it signals the end of the downtrend. Very similar, actually, is double tops and bottoms, without the whole concept of your larger top. It sort of has the immediate breakdown of the key support. Your first key reaction low gets broken down, and then you subsequently have a trend reversal and a move to the downside on your top, and the opposite being in case on the bottom. Now, what I'm going to do is, this is all a bit of theory, and I'm going to show you in practice in a little bit on the charts. In fact, why not I show you a couple of charts now? Actually, sorry, no, before I do that, a couple of things that I wanted to discuss very briefly was, first of all, the big question is, should you get worked up about what you actually call your patterns? I believe no, in the fact that basically all your sort of reversal patterns will give you pretty much the same target. Say, for example, basically you measure from the neckline to the top, and then project that downwards on your top patterns, and basically you can derive that from both your head and shoulders tops, which is your neckline to the peak, measured projected downwards. Similar pattern with your double tops as well. So there is no real reason to get too worked up about exactly what you call your reversal patterns. There's another concept also within patterns is in terms of pullbacks. Now, sort of the key to understanding support and resistance is that old resistance becomes new support, and old support becomes new resistance. So you sort of get the flip of once you've got a level that's broken, that actually becomes your new level of resistance. Say, for example, if you've got a support that's in place and that gets broken to the downside, that will now subsequently become your resistance, because anyone who's bought in at that support, who's subsequently been broken, if they see a pullback towards that support, they will use that as an opportunity to sort of close that position for flat. That hence why you often will get pullbacks, and I'll show you quite a few pullbacks in my chart examples that I'm going to show you in a minute. Right, so a few examples. Okay, this is a head and shoulders top that I found on sterling, actually a weekly chart. So again, this just shows you that you do get patterns. You got your left hand shoulder there with one test, one low. You've got a sequence of higher lows here, but then you suddenly get the breakdown of that high low, and you get a retest of that support, which actually holds initially, but then subsequently gets broken to the downside. So on that downside break, you can then start to measure the peak to the neckline and then project that downwards, and you get your target at $1.76 figure there or thereabouts. So that's your head and shoulders top. Similar to that, you've got your head and shoulders reversal, where you've got your prevailing trend in place. You start to then, you've got your reaction, your lower reaction high there, which is fine. And then suddenly you start to get a test of that. And this is actually a horizontal neckline. That previous one was not actually completely horizontal, but this is a pretty good example, actually. So you get your test of that resistance comes in and actually holds first of all, but then starts to break down. Sorry, or break higher. Sorry. And on the break, you start to see the completion of that head and shoulders reversal, one shoulder, one head, and your second shoulder. And then you project higher from the neckline to the, from your head to the neckline, and then project that upwards. And you get a target of 164.75 on sterling yen, which only just missed its target. In fact, if I run this on, it didn't actually quite hit it. Now, the other thing I was going to say was the implied targets. Now, you need to make sure that you know exactly what your overriding trend is, or what your prevailing trend is, because it will ascertain exactly what your how your attitude towards your targets are. If you're sitting in a big long-term downtrend and you see a reversal within that downtrend, unless it's a major trend reversal, if it's like a secondary trend or a tertiary trend reversal within that downtrend, then you need to understand that bear market rallies will often tend to undershoot their targets. So you'll often see, for example, in this example here, you had this reversal and it did work for a while, but it didn't quite meet the target, and that is because you've got an overriding bear trend in play here, and that subsequently put paid to the rally going on for too long, and that is a concept that you need to also be aware of. Small print on charts. I have to apologise for that. I've got some bigger print that does come through in a bit, but yeah, sorry about that. Okay, there's not a lot I can do about that now. And also look for confirmation as well in your patterns. Confirmation is it is probably my favourite word in technical analysis. I love confirmation. I don't like to trade off just off a whim. I like to have ideally multiple indicators confirming, but in terms of pattern analysis, your confirmation will often come with a retest of your levels, of your breakout level. So in this case, your neckline gets retested a couple of times, actually 3 times, and then you get this continuation of the higher lows. So that is sort of confirming that you're getting a turnaround in this outlook. And you get to move higher. Also, you can look for your momentum indicators. I know that momentum is not really involved in pattern analysis because patterns is all about price, and momentum isn't necessarily specifically about, well, I mean, it is about price, but not in this regard. You can also look for confirmation moves on your momentum indicators as well. So if you've got a head and shoulders reversal, say, for example, or a double top, a double bottom, you want to see your momentum indicators also breaking out above those reaction highs as well. So you want to see confirmation ideally on your momentum indicators as well. Okay, so here is the example of a double top. Again, this is on Eurodollar recently, actually, April 2014. So we had a lovely double top here that broke down below your neckline that comes in around $1.3670. Again, you get 2 tests of the neckline. Actually, 3 if you count this one here. But you got 2 subsequent tests of the neckline before moving to the downside. Now, the other thing is, if I zoom out slightly, you can actually derive, I'll do this quite quickly, hopefully. You can actually derive another head and shoulders top. You could say that's your left-hand shoulder, that's your big head, and your right-hand shoulder. And subsequently, you actually get a downside target that, again, was also met. So that your red line is the downside target from your double top. And then subsequently, you've got a consolidation around that target, which is interesting. And then suddenly you start to go again, and you sharply move down towards the target, the implied target of the big head and shoulders top. So a couple of patterns in one on that Euro-dollar chart there this year that you could have played.